Good morning traders, it's Pete here, welcome back. This is another Trading Kitchen video. In this video I will show you how I analyze the market, how I do my pre-analysis. By the way, are the same analysis that I share with you guys every morning for free in my Discord group. I will do the same thing with you, so you can have a look how I basically identify reaction zones and key levels from which price could react in the session. And by the way, so how I identify a daily bias. I'm an intraday trader working only on S&P and Nasdaq and Dow Jones, sometimes only futures. The bias is very important, even if I sometimes open a counter trend trade, okay, a reversal trade. But obviously knowing the bias allows me to have much higher risk to reward ratio, because I sometimes I'm able to line up with the main structure and increase, by the way, also obviously the win profit. Okay, so I always say that trading is a matter of confluences. Okay, there are so many tools I use. The core, okay, the main thing is that this confluences, or the highest part of them, must tell the same thing. Okay, so the first thing is the macroeconomic event, macroeconomic environment, etc., etc. Well, I have sufficient knowledge about this. I know how to read the market. I understand why the central banks do a thing or another thing. I know how price can develop following a news, etc., etc. But I'm not good enough to tell you something about this. Is a topic that I don't master, so I have to perfect it. By the way, I follow some very cool guys that share their opinion based on very technical skills, so I will not tell you anything about macroeconomic, which is something very good to know and is very important. I mean, it's not crucial. Okay, you can trade without knowing everything about macroeconomic environment, but it's a very good thing to know. The second thing is the COT report, commitment of the trader, which is something that I already shared with you guys, but I want to do it also in this video. So basically, this is very important because this is a very important tool, because it shows us in a very objective way where the big boys out there want to do, basically. Okay. So the website is tradingster.com, and the only thing I care about is the asset manager institutional. Okay. So how to read this COT report? It tells me that they are closing long position for 3,622, and they are closing short position as well of 31,000. Okay, so 10 times, okay, more than long position. What about the net position? They are long. Okay, it's clear. And this graph, which is the most important thing. So you imagine that this is a candlestick chart. Okay, so in terms of price action, what is doing? In terms of price action, for the first time after a strong bearish, okay, movement in which we have a break on structure one after another, for the first time we have a long signal. Okay, because we broke this structure here. Okay, so in terms of price action, if this if there's a normal chart, candlestick chart, we can see that we are lining up with the main bullish trend, okay, which is something that here and here, obviously, I mean, they tell me the same thing, okay. So in terms of COT report on ES future, this is this is ES futures, we are long, okay. The second tool is the sentiment, okay, the retail sentiment. So the logic behind this is that if we know that 90%, 85%, 75%, 95%, I know the exact number of retailers every day lose money on the market, we have to wonder why we have to do the same thing. Okay, why we have to trade in the same way that they trade. So US, the only thing I care about is this graph, this histogram, okay. So we know that probably the most part of traders that trade US are short for the 63%. Obviously this is an indication, this is not the right number, okay. This is only a smallest part, a very small part, okay, of the huge retail world, okay, but it's something that you can, in which you can believe, okay. So 63% of retail traders are short. So what does it mean? That we have to looking for long position. And so retail sentiment and the committee of traders are telling me the same thing, okay, that we have to go bullish. So these are the two extra chart tool that I'm care about. Then I move on the chart. And so macroeconomic, committee of traders, retailer sentiment. On the chart, on the graph point of view, the thing I have to care about, which I have to care about, is price action and volume. Okay, the price action, I mean, is something that must tell me the same thing in a higher time frame and in lower time frame as well. Volume is something that I only see on the lower time frame, on the time frame which I'm looking for a trigger. So weekly chart, which is something that I see only once a day, not for the level, not for the bias to be, could be good for bias as well, but I'm just looking for a key level, okay, in terms of structure. Here, for example, we have this ICT. I know that the name of this confluence of this, I don't know how to name it, but I mean, this is implied fair value gap, or probably, I don't know, probably BPR, so balance price range, something like this, okay. But basically this is a very high potential zone in which price could retrace, okay, and react. On the weekly perspective, we were bullish, then we get a rejection, price then bounce to the supply zone, to the demand zone, okay, from which the last impulse has started, make this beautiful engulfing and line up with the main structure, okay. So in terms of weekly, we are bullish. Here we have a buy side liquidity, and this is a very potential target for a middle term trade, okay, which is the high of the last 2 years, or 3 years, sorry, or the high of ever recorded on S&P, okay. So this could be a good level from which price could react as well. And And that's pretty much it for a weekly time frame. Let's move on a daily time frame, and we are looking for something quite similar, okay, but a little bit more specific. For example, here we have this fair value gap, and price grabbed the liquidity that was over here, so we know that here there is liquidity. So this is a very good signal, a very good level from which price could react at. Okay. Okay, so in terms of structure, price broke the structure. Okay, no, sorry. This broke this structure and keep on going long. Okay, so that's enough for this day. Okay, in terms of daily template, daily chart. This is sell side liquidity, so this could be a huge reversal zone. This as well. We have all this fair value gap is something probably we don't care for today. Okay, so then before moving on the 50-minute time frame, which is my template, my daily template, the one thing that I looking for is TPO, in which in terms of volumes, I want for the price, for the volume to confirm that we are bullish. And as you can see, look at the yellow boxes, which are the point of control of the single sessions. After this ranging period, this ranging time, we have this strong impulse, and basically this is a very good zone, okay, from which price could react in the future. No, this is board, and we finally have a break of the structure, and price now is ranging here. This is the zone that in which the price is accepted. Okay, here I'm looking for poor highs and poor lows as well. Okay, which is something that probably will cover in the next video, but these are also good levels from which price that works like a magnet, basically. Okay, it's not price didn't have to react from or reverse from this poor high and poor lows, but it's something that probably price will reach in the future. Okay, we don't have any poor lows over here. We have this single print, which is something quite similar in terms of concept to fair value gap, and this is a good level that price also this were like a magnet that could be used from could be used also for targeting price, the trade, and obviously the point of control of yesterday, which is this, and this is untested, so it's naked point of control. Okay, these are all levels that could be good to keep an eye. Okay, so now in this moment price is reacting, is reaching the single print through the gap, so price could react right by now. Okay, let's have a look here. On the empty template, I'm looking for yesterday high and yesterday low, which is this one. Very good levels from which price often react very good. So yesterday low and the previous session, which is we are approaching on US opening. So this is the London high. Sorry, this 222. No, sorry, this is the Tokyo high, and this is London high session. Okay, the Tokyo low. I didn't. I don't have to highlight Tokyo session low because it's already been tested. So probably it's not something that I will care during the US session, and the London low will be this one. Okay, and it is developing yet. Okay, so this is what I'm. Why we have this one? This is the. Okay, so this is basically our level. Okay, these are our levels. So 50-minute time frame. Okay, and this is the chart that I will share right by now on my this group. By the way, you have future course, you have CFD course, you have journal, you have backtesting, you have so many useful training content that can really help you becoming profitable trader. Everything for free in my Discord group. Link in the description below or in the comment section. So that's pretty much. When I have everything on my chart, I wonder, we have to go long. Where price could react and to line up with the main trend. The one thing that I was thinking right by now is that we are inside a premium zone. So when we are inside the premium zone and we want to go bullish, we want to go long, the first thing is waiting for the price to reach the discount zone, which is below the 50% of the main range trend, which is basically the yesterday session. Okay, below 50% we have to look for some good potential reaction zones. So we have this untested naked point of control, and we have this fair value gap with this stop ending. This is good. Okay, sorry, this is a good signal because price is ranging after this strong impulse, and then we have a stop end that allows price to move higher. Okay, so what does it mean? That here we have orders to fill. Here, this is a good zone from which price, I mean, there will be a fight in this zone. Okay, this is a key area. The other zone is this one. We are on the 75. This is now Fibonacci retracement. This is quarter theory, which is much more effective on my opinion. So this could be the last zone from which price could react, to be honest. Okay, because we are inside the big ranging area on the high time frames, and so this could be good as well. Okay, probably this obviously the more discount the zone is, the higher the probability will be to have obviously a risk to reward ratio. But you know, I'm not sure obviously the price will go bouncing over here. Okay, so this is the first zone and this is the second. Okay, so this is the first, this is the second. My ideal trade for today will be this one. Okay, and this is the chart that I will share on my Discord group. Okay, so guys, that's pretty much it. Hope you like this video. Let me know what you think using the comment section below. Subscribe the channel, press the thumbs up button, press the bell, same old story. Thank you very much, and see you in the next video.